bit of a muted opening that's come in for the South Korean markets.
The Nifty has basically had 3 days of positive close. Yesterday, we hit the 20-day moving average and then basically gave up some gains.
The execution has been quite strong. Core margins continue to remain quite unhealthy at this point of time.
Mid-cap index is up about a quarter.
I don't consider Zomato as a discretionary stock.
We are not playing for this month or this quarter. We're building a FMCG powerhouse of the future.
As far as direct tax is concerned, which would be people earning between 5 lakhs and 25 lakhs in my view.
और ये हर देशवासी के लिए सर्वाधिक गौरवपूर्ण है.
Outperformance seen in the mid-cap index today. The mid-cap index has turned positive on a week-to-date basis.
It has been a much talked about area wherein it is expected by the industry that there will be tariff revisions in some areas.
Numbers broadly appear in line, but of course the expectations were very, very muted.
Not sure whether we're likely to see a slip on the fiscal deficit number that's already been articulated.
I don't see any other measure coming on the bank deposits front.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Good afternoon. That's the day so far, and it's been a good day. And actually, so far, it's been a good week. I don't want to jinx it because the week is not over. Tomorrow is the big day. But ahead of that, the bulls seem to be going into the event with faith and with positioning. And you're seeing that in the kind of stocks that are rising higher. But the good news is that the market, Nigel, has come to the top end of the trading range that we've seen for the last 10 odd days. I mean, 20th of January, we were around these levels. And we're back there.
Well, that's right. And it's the start of a new series, right? So and history suggests that when the FIs are net short by close to around 89%, not to say they can't go higher than that, but history suggests when they've been at 89%, then we normally see a bounce. It happened in October 2023. You know, in November 2023, in that series, the Nifty went up by close to around 6.5%. A lot went on there. The ruling BJP did very, very well in the state elections. The Fed as well sounded more dovish. But who's to say that we can't see an encore? So let's see how that goes. But today's the last day of January, and there's another data point that this will be the 4th straight month that the Nifty will end in the red. And that's the first time that it's happened in more than 20 years. So that's another data point.
Well, looking to break the jinx, and can, this week provide that? Can tomorrow really provide that? That's what it's all about. And you can see that build up in the market. Also, so what's moving higher? There's a fair amount of a consumption play in the market today on FMCG stocks, which has also been aided by, to be fair, with good numbers coming in. Nestle really pleased the street. Marico's numbers are also not bad. The volume growth for both Nestle and Marico is slightly higher than the street's extremely muted expectations. Nestle just sort of took off to the races immediately after those numbers came in. And then let's not take our eye off the entire PSU basket, CPSEs. Once again, your railway stocks are, pushing higher. Your economy-facing government-owned stocks, they're pushing higher. So if I just sort of name a couple of them, as a sense, look at Ircon. Ircon also won a, JV order. That's another reason why the stock is up. But look at NBCC. Again, NBCC, frankly, there's another reason because of the fact that it's getting added in FNO. But the broad point is look at RVNL, look at Texmaco Rail, look at Hoodco, look at RailTel, look at BHA, look at NHPC, BEL. These are your budget stocks with the hope that CapEx is coming back. And to add to this, today we've got some decent earnings reactions also coming in. So just to quickly name a couple of them. Naveen Fluoro, Nestle, I've already mentioned. Kalyan Jewellers is interesting. It's earnings plus sort of some action happening at the board level, which we'll talk about later. But these have been the big movers. I think JSPL is the only real disappointment on earnings today. And Nigel will tell us why in just a bit. But I guess all things put together, Nigel, not looking too bad, at least as of now.
Well, that's right. And JSPL, in fact, has come off closer around 7% from the low point of the day. It's not so much the earnings, the grey area with regard to why they're doing such a big capex. That's the fear. I'm trying to get the management to clarify. Reached out to the company as well. So let's hope they put some clarity on board. But otherwise, they're just spoiling their own party, going ahead and, in fact, increasing capacity from 9 to 15 million tons. And suddenly you announce this big capex. they'll have to come out with some rationale to cool off the market, because otherwise the cheapest stock in the among the private miners. So we'll have to see whether or not there is some support at lower levels, and that's precisely, I think the low of the day was 730. From there it's up close to around, I think, 8-9% or thereabouts.
Okay, so that's JSPS. Lots of action. Let's straight away get to it. We've got, of course, our technical experts joining in to kick things off. Mitesh, afternoon. It's been a nice green day so far. I'm in sync with the market's mood, I think. But the question is, now for the last 1 hour, what would your trades be?
See, good afternoon. Looking at the chart patterns and the structure, I think the idea is to be on the positive side. The only worry is the impending event tomorrow. So you will be long, but not very aggressively, because, again, the guessing an event outcome can be very tricky. But yeah, I think the Nifty should head towards 23,500. It's actually kind of done that today. 530 being the high, but I think we should be able to capture that, and once we start closing above 23,500 520 zones, then I think we look at a possibility of 23,850, even 24,000. So I'm quite positive in the short term, looking at the structures of the Nifty and the Bank Nifty chart. The Bank Nifty needs to clear 49,600, 650, 700 zone. We got a high of 49,674. I think once that is cleared, then Bank Nifty could head towards 51,000 plus levels. So again, both the indices are positive, so trade with long bias. But as I said, looking at the event, just you might want to be slightly on the cautious side. I have a buy on Nestle India with a stop at about 22.90 for targets of 23.70, and the other one is the other one is a buy on Uber Realty, which I would recommend buying with a stop just below levels of 17.94 and a target of 18.60.
Okay, all right. Thanks a lot for that, Mitesh. And bang on, Mitesh. I recall when the markets were less than that 23,000 odd mark, you had come out there, I think around 22,800, 22,900, and you said you're saying that we're oversold and it should bounce from here. Now you're saying maybe if we can get past those higher levels, maybe there's more in store. So we'll keep that in mind. Thanks a lot for that. Well, let's hop across to Nimesh. He's here to tell us about Titan as well as Jubilant Foodworks. Both of them are in focus on the back of a Morgan Stanley note. Nimesh, tell us more.
Yes, Nigel. So, both the stocks are buzzing in trade on the back of a good upgrade from Morgan Stanley today morning. So, Morgan Stanley today upgraded both Titan and Jubilant Foodworks to overweight. On Titan, they have raised the target price to 38.76, and on Jubilant, they have raised the target price now to 781 versus their earlier target was of 620. So, meaningful upside on both these names, according to the Morgan Stanley. Now, they have identified 3 reasons why they've upgraded both these names, which is Titan and Jubilant Foodworks. One, these businesses are building customer captivity against a weak consumption backdrop. So that's one big positive for both these names. Second, strengthening their core. And third, steady market share gain. So both these companies have seen market share gain in the last few quarters. That's the key reason why they've upgraded both these names. Now, coming specific to Titan, Morgan Stanley says that the consistent and predictable growth strategy deserves a quality premium, and they believe that this cannot get unnoticed by the market for a very long time. So, and as and when the competition intensity lowers down, you will see market latching up to it. And the fact that by Titan is the core business is growing for Titan, and they've retained the market share, which Morgan Stanley believes is quite important. And that's the reason why Morgan Stanley is recommending clients to buy such a predictable business, which is Titan. So that's the reason for Titan to be upgraded. On Jubilant Foodworks, I spoke about the target price, but on Jubilant Foodworks, Morgan Stanley believes that the business, while it's been struggling in the very near term, but they're still delivering growth, and which is quite visible in the recent numbers as well. And they were surprised the kind of growth that Jubilant has reported in the last few things. And also the strategy what they're doing to fuel the growth going forward, that's very important as far as Jubilant Foodworks is concerned. So 2 upgrades in the consumer basket, both Titan and Jubilant Foodworks upgrade to overweight, and on both the names, Morgan Stanley has sharply raised the target price on Titan as well as on Jubilant Foodworks.
Okay, all right. Thanks a lot for that, Nimesh. And on Titan, I recall we had this chat on Editors Roundtable that if you want to pay jewelry space in the last many years, they'll have an up and down year, up and down quarter. But that's really been the flag bearer, right? You have various other companies. You had Tara Jewels, you had PC Jewelers, you had Gitanjali Gems. A lot of them came and went, but this one is really holding strong. And in the past, you have Kalyan Jewelers as well, has done reasonably well, but it's come off from the high point of the day. By the way, we have Vedanta that's reported a set of numbers. We'll have to keep an eye out on the segmental breakup, which will be the most important part of these numbers, because we already have Hindustan Zinc that's come out with their set of numbers. So the crucial number to look at for Vedanta will be the mix, and the aluminium business. The EBITDA that we're working with is close to around 4,350 crores, 4,300, 4,400 approximately. That's the crucial number on the aluminium business, and that's bulk of the profitability as well. So we'll get that EBITDA number out for you with regard to Vedanta. But let's get in Prakash. Prakash, what are you making of Titan as well as Jubilant FoodWorks? Prakash?
I can't hear you.
All right, Prakash, am I audible now?
Yeah, yes, now you are. Thank you, Nigel. Thank you.
Brilliant, Prakash. Prakash, Friday afternoon, let's talk about pizza or maybe some jewelry. Titan as well as Jubilant FoodWorks. Nimesh just told us about brokerages being a little bit positive, and I was just making this point that we've seen many jewelers in the past, but only one has really stood the test of time, right? And it has close on 7% of the market share as well, and they're saying that they'll take it to double digits. Your view on Titan as well as Jubilant FoodWorks?
Good afternoon, Nigel. So, I think Titan has mastered the craft of balancing, the sales growth on all counts, thanks to its wonderful product mix. I mean, there is not a single segment that you would want to, believe will not grow at some point in time through the year, through the cycle. I can tell you, what they've achieved through some of these. I mean, while the world is kind of getting worried about LGDs, they continue to march ahead with some amazing growth in even their Zoya product line. While, Tanishq, of course, continues to do well all around, as much as other players have also, been noticing growth. But the interesting thing about Titan is that it has managed to get the best in class service and product combination. And that is something which is a moat in otherwise what seems like a very undifferentiated market. So I don't think there's ever going to be any letdown in the P multiples that it will fetch, the premium that it will fetch in the market. So from that perspective, any growth will get very amply rewarded. Operating leverage has already come in, and the market will recognize that. Only caveat is that if other things start growing, broad mass consumption starts growing, you may not have people wanting to only buy the discretionary spending, elements or businesses that are right up there on the top end of the spend. So that's the only thing. It will probably be a little bit of a dilution in terms of allocations. But if you don't have Titan in your portfolio, you need to buy it at some point in time. This is there's no better time than today to do it, given where they stand. On Jubilant, I can tell you one thing: the companies thinking in terms of how to counter, food delivery competition. So, as we've already discussed this ample time, that it's not they're not competing against other pizza players, but they're competing against other delivery guys. And from that perspective, they've been able to retain value even when they are priced higher than some of the other segments. So other categories, and that has started reflecting in their results. So instead of focusing too much on new stores, they've probably deepened their business in existing stores, the ones that are well located and that can cater to a much larger geography now. So there are subtle changes, but that's kind of taken up. I think at 700, it also gives you a very good playing field level playing field to kind of actually expand about 30-40% in terms of revenue and commensurately with that margin also. So my target for something like this is almost like a 35-40% upside in the next 12 to 18 months. And remember, we are talking about consumption coming back. Usually, this is one area where it starts having a very linear impact as it starts. So hopefully, things will be better tomorrow after the budget and for players like this, and of course, through the year as well.
Right. Prakash, I wanted your view on Vedanta as well. The stock ran up one way from the start of January till I think the middle of 2024. And then, in fact, it's cooled off a little bit. But taking into account the dividend as well, I think at around 440 rupees, actually it should be around a 490 to 500 rupees stock. Now, the numbers look quite good. And I say this because the aluminium number, the EBITDA number that Kotak was estimating was 4,350 crores.
Right.
They had that benefit of aluminium prices improving. And they're focusing a lot on the cost side, a lot about backward integration, trying to get more amount of their coal from their own backyard, a larger amount of their alumina as well from their own backyard. And that's clearly showing up. Now, what do you do of the stock? At around 440 rupees, if you believe the world is going to recover, it's not going to be a very dull place, then in fact, you'll have to play the metal pack. And this one has all the metal stocks in there. It also is a special situation because that demerger should take place sooner rather than later. Tell us more.
No, I think there's not much that I have to add except for the fact that I would echo two things from your narrative. One is aluminium seems to be still on a very strong footing. Look at how we've discussed this, but I'm just repeating for the sake of corroboration with the sector. Nalco went all the way down just because alumina prices were shrinking, and then again has made a very significant comeback because aluminium is going up. And I don't think consumption or demand for aluminium is going to let any price cool-offs happen beyond where you see it today. It'll probably be in a very tight, narrow band. The other thing is the EBITDA from other businesses, which are zinc and silver, and all of that is also extremely very robust in the current set of earnings. So my sense is, if you have a year-on-year growth which is about 25 or in the range of 30%, you will not see that taper off in a hurry. There's nothing which is going to drop off a cliff. And from Vedanta's perspective, the demerger could unlock values and bring in efficiencies, let's say, a year from now. So somewhere in the middle of the year, you will probably be very ideally poised to buy into that event, but not at this point in time, but closer to maybe, April, May, June. That's where, things will start kind of looking more promising. And by the time whatever price equilibrium had to be discovered, thanks to its dividend payouts and all of that will happen. But at this level, yes, the risk reward is favorable. I'm not too sure of the upside being very imminent, but yeah, over the next 12, 18 months, you will see it do very well if the entire commodity complex continues to do well as well.
Okay. Got that. By the way, I was looking at a very interesting chart that's come in from the economic survey. And right now, there are the CEA there briefing the press, and I was looking at some charts that he's putting up in that press conference, and one of the most interesting ones is talking about the disparity between corporate profits and wage growth. For most of the years in the last 5 years or so, that chart talks about how corporate profits have soared and wage growth has been quite low. In fact, just to quote that number, since I was looking at it, corporate profitability in FY24 is about 30-odd%. This is obviously the aggregate that chart is talking about. However, in FY24, corporate profits are 31.7%. This is FY24 over FY23. However, wage growth is at 13%. So it takes us back to that whole debate about, distribution of corporate profits and why consumption is slowing down. But speaking of consumption, we've discussed the pizza stocks, we've discussed Titan. Let's talk about the FMCG names as well, Prakash. After a long time, there's green on some FMCG names. Tata Consumer has been doing exceedingly well. Nestle's numbers were good. The volume growth was better. Yeah. Even Marico's volume growth, better than street estimates. So what do you make of it? And too early to say the worst is over?
Not really, Surbhi. I think the change is very clearly evident, and volume growth is definitely a very decent indicator. And this is not some season where, cyclically, for Q3 is not something where you would expect some major change that would happen. Q2, Q3 is usually better post-monsoon and things like that. But, I have a lot of anecdotal belief in the fact that Nestle has the product mix that always gives you the first indication of change, because they actually are at the cusp of rural and urban consumption most of the time. So if that is happening, I would be surprised if the rest of them also follow suit, probably with a lag. And when Dabur finally kicks off its change in volumes favorably, the cycle is turned. We had some caution that was expressed by, I think, Godrej Consumer, if I'm not mistaken, but that seemed to be very company specific or segment specific. But if you look at numbers from Marico and Nestle, there's no reason why you would believe this is just a one-off and would follow through. But and possibly if the economic survey which you are alluding to brings out the fact that there needs to be some reduction in disparity between income levels and wage increases have to follow through in some way, consumption will definitely get a boost, and that's what most FMCGs will love to see happen. And the market is also probably waiting to see it because they're available at very decent valuation from a historic perspective. So you can't go wrong if things start looking up. You might just have to wait it out for another 3 to 4 quarters, but things could look very, very well out there.
On a lighter note, Prakash, so at lower level of wage growth, and then we work 90 hours, and that's that's the destiny, I guess, right? That's on a lighter note. Just jokes aside.
This will be the highest number of working hours for the week because
we cross 90 regularly.
And then even on Sunday, you'll have to look at the budgets will be. I hope you're bracing yourself. But Upasana is waiting by, so let's go across. Upasana, tell us more about the specialty chemical stocks.
Well, certainly, specialty chemicals companies are in focus as Q3 suggests a glimpse of recovery in the chemical business. First up, let me talk about Gujarat Fluorochem. Company reported Q3 numbers which were above the street estimates. It was a margin beat, and EBITDA margin reported saw an uptick of 480 basis points on a Y-on-Y basis at 25.6%. Now, company's segment, that is fluorochemicals, has outperformed with a revenue uptick of 19% on a Y-on-Y basis, and company has given an outlook that it expects specialty chemical volumes to improve from Q4 FY25 onwards. Next up is SRF. The company reported a good set of numbers supported by growth in its chemical business. Now, company has reported a 14% top-line growth coupled with margin expansion of 120 basis points in its chemical business. Now, brokerages still have a mixed view on this stock. Now, next up is Navin Fluorine. The company has reported an upbeat performance aided by margin expansion. Now, company is confident of achieving 25% plus EBITDA margin by Q4 FY25 and has shared an outlook on its specialty business. It says that the ramp-up of Dahej and Surat plant is likely to aid growth in FY26. Multiple upgrades on the stock, and Citi has given a buy rating with a target price of 4,500 per share. Now, we'll be closely watching out for numbers of Aarti Industries reporting its Q3 FY25 numbers tomorrow. We are estimating a flattish revenue growth, and EBITDA margins are likely to remain under pressure around 13.5% versus 15% on a Y-on-Y basis.
Okay, all right, got that. Prakash, very quickly, so some light at the end of the tunnel for chemical companies as well.
Yes.
Are you convinced about any of them?
No, I think I would want to see the Aarti numbers come through, but my anticipation is, given a channel checks, that things could probably start looking up. This was anticipated somewhere in the middle of last year, calendar 24, didn't happen. We waited maybe 3 quarters after that, 2-3 quarters after that, but this seems to be the turning point. So fingers crossed, we'll have to wait for the commentary as well, not just the numbers, to establish some sort of a correlation with the improvement. But very, very likely that you will probably see that given what Navin has done. But remember, Navin's margin expansion is still not the same as what it had during its peak years, about 5-6 years back when maybe the multiples were...
Prakash, I'm so sorry. Prakash, so sorry cutting you off over there. But our colleague Timsy is actually quizzing the CEA. So let's quickly go across.
Only then people can buy the cars that Force Motors is manufacturing. So given all of this, what is your view or what government can do on the employment side?
Again, what the government can do was already demonstrated in the July budget of last year when the government announced multiple schemes to incentivize.
People can buy the cars that Force Motors is manufacturing. So given all of this, what is your view or what government can do on the employment side?
Again, what the government can do was already demonstrated in the July budget of last year when the government announced multiple schemes to incentivize labor augmentation in businesses, both in manufacturing, non-manufacturing, new jobs, adding to existing payrolls, etc., by defraying some of the contributions to EPFO, announcing the corporate internship scheme. So what the government can or should do was extensively mentioned, and even policy actions taken in the last budget of July 2024. And of course, the government can continue to take policy actions as it has been doing with respect to PLI schemes on labor-intensive sectors, and also in terms of the deregulation action, that is the government's not just the union government, but the state governments and local governments' contribution to employment generation is by reducing the fixed cost of doing business so that firms can raise the variable cost by hiring more people. Beyond that, I think not everything needs a policy tweak or a policy intervention. Some of it is in the natural self-interest of businesses to be able to find this balance. And that is why I gave the example of Mr. Henry Ford. I'll just ask my colleague, Anuradha, do you have anything to add? No.
Dr. Nageswaran Karishma this side from Business Today. The previous economic survey had mentioned about the China +1 strategy and how India could draw dual benefit out of it. But this one does not explicitly mention it. Does this indicate a change of stance of the government, or the strategy is still a part of it?
There is nothing. This time we're speaking about the importance of importance to be given to domestic growth drivers, building domestic supply chain resilience, which is the same as what has been the thought process behind the Atmanirbhar Bharata, China +1, etc. So this is the continuation of the same theme.
122. सर मैं लक्ष्मण हूँ CNBC आवाज से। छोटे छोटे दो सवाल हैं। एक तो आपने
happening in the private sector on the number of hours. So that is not something that we want to join. The point here is that small businesses do get seasonal surges in orders. And it will be good for them to have the flexibility to be able to achieve the weekly working hour limits over a longer period, which countries like Korea, Japan, etc. do that. So it is all about managing the seasonal surge in businesses. We are not going into the question of number of hours that Indians need to work, etc., which is a debate happening elsewhere. It is very difficult to give you a quantitative estimation with respect to the impact of trade policies that may be pursued by other countries, because right now it is hypothetical and speculative. But in general, what we have done is to take into consideration the uncertainties posed by the current global environment in terms of rising trade restrictions, rising investment restrictions, and therefore the growth number that we have spelled out does reflect these uncertainties, broadly speaking.
All right, so that's the CEA addressing some of the points that the economic survey has raised today. But with that, let's move back to the market. It's still pretty steady as far as the gains are concerned, 250 points higher. The market has actually, the Nifty has traded above the 23,500 mark as well, and it's inching back towards that high point of the session. So let's see, another 30 minutes to go. 30? Yeah, just about 30 minutes to go. Prakash, thanks very much for joining in. We do have to take a very quick break on that note. Back with more in just a bit. Welcome back. Well, it's just a little after 3 p.m. and the market's in a good mood so far, gearing up for the big event tomorrow. There you go. Most of the gains are also intact. We have Vikas Khemani, founder, Carnelian Asset Management, joining in. Vikas, good to have you on. So just a few hours to go now, right? It's not even 24 hours anymore. What would you say? I mean, is this budget, because of the situation that we are in, the macros, the micros, the global and the local, has this budget become a little more important perhaps for the market this year?
I think, Surabhi, if you see over the years, the importance of the budget has been going down because
there was a time when most of the policy announcement used to happen through budget, which has kind of been taken away. I think it's largely now probably reduced to 2 or 3 things. One is, I think, how government is thinking about the fiscal deficit and the breakup of the expenditure between capital and revenue. And secondly, I think to some extent on the direct tax, especially the personal income tax. So I think these are the 2 things market would look and watch forward this time around. I think by and large, there's an expectation there will be some rationalization on the personal income tax, which could leave some money in the hands of middle class. So I think to that extent, it could be positive for the consumer stock sentiment. My own view has been that I think these things tend to last, maybe a week or so. They don't, necessarily change anything from a direction of the market perspective. So I think probably next week we will, it'll be done, event and forgotten. And I think the story will move to the, earnings growth, liquidity, valuation, all those things. So I think, this will come and go. And I don't think that there is specific big game changing is likely to happen from this budget per se. Of course, some of these things which we are looking to watch out, we will watch out. And if some personal income tax reduction happens, that will be good news.
All right. Hi, Vikas. Good afternoon and good to see you. Vikas, over the years, I've heard you, from the corporate job till you started running your own fund, and you're one of the flag bearers about this India story. Keep investing, stay bullish, And I like the quote you put out as well, on your Twitter ID just a few days ago. When you said you need to have a 10-bagger, you can get there, but you need to have the stomach to take the blows as well. When the stock becomes half, then you need to back yourself. So I think a lot of investors will take a lot of heart from that fact, because a lot of stocks, after falling 40%, in fact, they pull back a lot of those losses. But you need to have the stomach to take some of those blows. That said, Vikas, what about budget? It could be a few days event. But I think the capex spend is something that the street is really looking forward to, because that could be a compounder, that could be a multiplier as well. Some rationalization of taxes will have consumption. But I think that capex spend that number is going to be important. And I think the following week we have the RBI as well. That's realized there's a problem, liquidity is required, and they're taking measures as well. So comment on both these 2 factors.
No, absolutely. And I think, government has been always very clear about the direction to spend on capex. If you see last couple of budgets also, this has been very clear. And this government understands very well that we need to spend money on building infrastructure and do capex, and which has been executed. I think last year per se, there was a little bit of slowdown because of the election, tightness in the liquidity and all those things, which I'm sure there are measures being taken to correct that. I see no reason why, any thing bad will come out in terms of capex number in the budget. I think it'll be fairly fine in my opinion. So while market should get clarity, but I don't see any big change because I think as far as the broader vision of government is concerned, we know budget is just a subset of that outcome, subset of that policy broadly. So I don't think anything negative will come out on that.
And Vikas, I think, you all have been participating in this fall, right? You all have been nibbling in. So if you could tell us, how are you all positioned with regard to your cash? Are you all seeing, the flows that are coming in are as solid as well? And if you could hint to us at least, what have you all been buying? That would be great news for our viewers.
I think so. I think the fortunate news is that in the last couple of days, we've got a lot of clients calling us and that shall we put more money? And we have seen flows coming in. And we were last couple of months were sitting on sort of cash. We were deploying slowly the fund. So we have used this opportunity to deploy, not fully, but still some amount of capital. So we're not sitting on a whole lot of cash, but generally speaking, we are in a more deployment mode because we don't think anything materially has changed India's story apart from the prices. So when you see a 30-40% correction in a stock on a market, I think it's a great news from a structural story perspective. Of course, that does not mean that the markets will run away tomorrow. And market had its own cycle. So I've been saying this market probably will be in a 22,500 to 25,000 range for quite some time. Market needs to consolidate, and which is what is happening. And in such consolidation phase, whenever you get such kind of opportunity, they are the great times to kind of buy stocks. But from long-term perspective, because short-term uncertainty, nobody can kind of time out and can play out how they will work out. So our view continues to remain that India is one of the great story. Nothing major changing structurally perspective. There will be 1 or 2 quarters of here and there, whether it's corporate earning or capex cycle or some other reason, right? But they don't disturb the long-term story. And I'm as bullish as I was ever from a structural point of view.
Okay. All right. Vikas, By the way, we should just pull up the UPL share price. Let's get UPL on the screen. Another one that's hitting the mark from the chemical space. So, yeah, there you go, 7.5%. Why has this happened? Because year on year, there's a dramatic improvement in the numbers. And I just want to sort of read them out for the benefit of our viewers. There is a profit of over 800 crores, 828 crores versus a loss of some 1,200 crores last year. The revenue is up about 10%, and the margin, EBITDA margin, has come into almost 20% versus 4.2% last year. Not just that, the company is sounding optimistic, saying that they're confident of delivering EBITDA and free cash flow for the full year in line with their guidance. Market is absolutely loving it. Now, Vikas, help us understand this, because you've been sort of studying and following up on the China Plus One theme for a long time, right? And many of these chemical companies, okay, I think we'll get Vikas back. We'll just drop that line with him. But Carnelian, along with the Make in India, Atmanirbharta theme, China Plus One is also a big theme for them. And what's happened with the chemical space is that we've got a string of positive surprises across the board. There's SRF, there is UPL, there was Deepak Nitrite earlier. Even I think Gujarat Fluoro was not too bad, perhaps. So a couple of these companies, all of them have delivered well. We'll try and get Vikas back on and get his sense on it. Yeah, there we go. We've got the commentary from UPL as well on the screen right now. So looking good.
Yeah.
But, Nigel.
Yeah, I think we, by the time we get there, I think let's just get done with JSPL. That was the stock of the day in early morning trading session. So let's run you through a few, pointers on that. The numbers are a little bit lower operationally. The standalone EBITDA per ton was a little bit lower in comparison to what our poll threw up. The net debt number as well moved up by around 1,500 crores or thereabouts, or around 1,000 crores on a quarter-to-quarter basis. The pain point was that they announced some more capex, and there was lack of clarity on that 16,000 crore rupee capex that was additional in comparison to what they have already announced. And that's, they're saying it's because to improve operational efficiency as well as reduce costs, but no big capacity addition. So that's why the street didn't like that too much. What are the brokerages doing? ICICI Securities, they got it bang on. They went ahead, they downgraded the stock to hold from buy. They have lowered their EBITDA estimates, and they've reduced their valuation as well. They were giving it 7 times earlier, now they're giving it 6.5 times. Nuvama, they have retained their buy rating. The target price they have lowered out there. And they are saying that this, commercialization of the enhanced capacity, that's got delayed, which they don't like it too much. And also because of that, they're factoring in lower volumes in the next few years, which results in lower EBITDA contribution as well. Moving to Nuvama, moving to Nomura, they have maintained their buy rating, reduced their EPS estimates as well as their EBITDA estimates. They are factoring in weaker steel prices as well as lower cost efficiency for the company. So put all this together, JSPL was a stock that was down 13% in morning trading session, and that's recovered a little bit because many believe that maybe at around 13% lower, bulk of this negative news was in the price. But I don't know whether we have Vikas back with us. All right, we don't have Vikas back with us. So let's talk about budgets. It's just a day away, and Yash joins us to tell us what the insurance sector is expecting. Yash, take it away.
Well, Nigel, the last couple of budgets have become pretty significant for the insurance sector because of the intervention which came in on the taxation side largely. And this time around, the insurance sector is expecting a few things from the union budget. First two things have been long-standing demands. The first one is from the life insurance sector. They've been seeking a separate tax deduction window outside of ATC. ATC provides, of course, 1.5 lakh rupees tax exemption benefit. Life insurance sector has an argument that they're quite big in terms of the premium coming in to them, and they want a tax exemption limit outside of ATC. If anything on this comes through, it will be positive for all life insurance companies. Now, coming to general insurance and health insurance companies, they've been seeking an income tax exemption window outside of ATD. This has been something that they've been asking for quite some time. If something comes through, it will be positive for all the general insurance as well as health insurance companies. Now, moving on to the next one, and this is widely anticipated, right? The government is expected to give more incentivization to the new income tax regime. If that comes through, if the government in any way sweetens the new income tax regime and makes it more attractive for people, then it could be negative for all life and all general and health insurance companies, simply because the new tax regime does not provide any income tax exemption for ATC or ATD. Finally, Nirmala Sitharaman, the finance minister, could announce taking up the Insurance Amendment Act in the budget session. There are 5 important elements under this. Increase of FDI to 100% in the insurance sector, positive for all insurers. Composite insurance license, positive for all insurers. Allowing individual agents to tie up with more than one life insurance company, negative for LIC, positive for all other private life insurance companies. Allowing merger and amalgamation of insurance companies with non-insurance companies. This will be positive for Max Financial Services. And finally, changes in the investment regulations for insurance companies.
Sure.
This will be positive for all life insurance companies.
All right, thanks very much for that. Perhaps not tomorrow, but in the budget session, we should hear more on this. Thank you, Yash, for the details over there. But for now, let's head across to Nimesh for D Street chatter. And the street seems to be feeling very optimistic and happy. Nimesh, it's been a couple of days of good recovery, lots of green on the screen. Now all eyes on Madam Finance Minister.
Well, absolutely. Surabhi, I'm a little surprised the way, the confidence with which the markets are going into the budget, and market wisdom is always right. So I guess, market knows more than what we know on what can come in the budget. But having said that, again, there has been a big recovery in the broader market names, and that's backed by FI buying as well. So within flows, the sense I'm getting is there is a bit of tilt towards the mid and small cap stocks in today's market. In fact, there is selling in some of the large liquid private bank names from larger institutions. That's from a flow perspective. Technically, I've been saying this 23,300 is a big resistance. Now we are trading above that. So maybe if there is something positive in the budget, you might see further short covering rally on the Nifty and in the bank Nifty. So that's from a technical point of view. I guess the market is clearly positioning Surabhi towards the rate sensitive stocks and names. So real estate for second day running or the third day running, there are very strong buy flows. NBFCs is what a lot of institutions are betting on and bidding for as well. So that is one space which is well bid from larger institutions. So all eyes will be, of course, on the budget. But I guess from a momentum point of view, looks like some buying interest is back in the broader market names and backed by institutional buying as well.
Okay, all right. By the way, those are Sun Pharma numbers on the screen. They don't look too great. The fact is that there's lower contribution from one of the big drugs, Revlimid, this time. I'm not sure if it's that or something else, but those numbers are at the operational level. There are a slight miss, the margin and the EBITDA. Stock's been volatile, suddenly fell, now it's rising. So let's see how it settles.
Just one point on Sun Pharma should be, the street was positioned for a weak set of numbers. The stock in this week itself is down 5%.
Yeah, that
so the street is positioned for this. These numbers look disappointing, no doubt, in comparison to what our poll threw up. But the street is positioned for that. That's today's chart. Pull up a 5-day chart. You'll see what I'm talking about. There's a big open interest built up as well out there. So keep an eye out on them. Disappointing numbers, but it appears the street seems to be prepared for a weakish set. Let's go back to Nimesh. Nimesh, just that one day you took a break and didn't give us some stocks, but then you're back in action. So that's good. Tell us what you're picking up.
So Nigel, I've been saying for the last couple of days that there's some bit of interest is back in the PSU names. So today the first stock is Hindustan Aeronautics, HAL. Good amount of buying interest is back from larger FIs is what I understand. So the flows are positive on the buy side and expect high delivery volumes in HAL today. So that's the first name. The second stock is ITC Hotels. Second day, it's locked at 5% down socket. There is selling pressure from larger FIs. So that's the reason why even in a trending up market, that stock has been struggling post-listing. Also remember for ITC Hotels, the bigger risk or the near-term overhang is the stake of Suti and BAT, and that can come. So that is the reason why the street is a bit nervous, and you're seeing selling pressure in that name. So that's the second stock. The third stock is Zomato. Well, the stock has been pretty much in the range of between 200 and 220 in the last couple of days. Some bit of bid interest is back, is what I understand from larger FIs in Zomato. So that's the third name. And the last is Geo Financials. This is interesting. I've been reporting that there has been constant selling from larger FIs and global funds into Geo Finance. Looks like that's pretty much coming towards an end. And in the last couple of days, the sense I'm picking up is that a leading domestic mutual fund has started accumulating at lower levels. So maybe that's the reason why you're seeing a bit of uptake in Geo Finance in the last couple of days.
Okay, all right. Thanks a lot for that, Nimesh. Well, I'll tell you what, we'll slip into a short break. You come back, we'll get into further detail with regard to Sun Pharma's numbers. Don't go anywhere. Welcome back. Keep an eye out on Sun Pharma. That's the one. The numbers, the prima facie look like a little bit of a disappointment, but the stock, the positioning was such, and that's the point that we were making, that in this week itself, it's gone in with some weakness. The open risk build-up is massive. So there's a bit of a miss on the operational performance, but the street seems to be buying into that bad news, at least as of now. We'll get the bigger reaction, I think, in the next session. But for now, positioning is playing out on that particular stock. Let's get in Mitesh for a couple of trades, though. Mitesh, the bulls are going into events saying we want to see some action, and they believe there's going to be something good for the market, good for the economy as well. They're giving a thumbs up, and they are coaxing, the center or the Ministry of Finance that give us something good. But what about you? Tell us a couple of stocks. Mitesh, we'd like to hear you.
Now it's good.
Perfect.
Yeah. Okay. So I think what I'm trying to say is that I have a very similar opinion. The idea is that the Nifty is just edging above 23,520. Positive sign. The Bank Nifty recovery is again very positive. So looking at both the indices, I think tomorrow could be a good day. At least the start would be very good. On the stock side, I have a BTST on ONGC with a stop at 259.5 for targets of 267, 268. Maybe higher, but we'll start with that. And the other one is a BTST on Escorts with a stop at about 36.04 and a target of 36.65.
Okay. All right. Thanks a lot for that, Mitesh. Well, by the way, I think there is a bit of an adjustment that we have to look at with regard to Sun Pharma. We'll try to get in Vinny because there's a Forex element out there as well. So maybe adjusted for that. The numbers don't look as bad as what it was. But as the numbers came out, we told you first itself that, these numbers are a miss, but positioning as such, so just be a little bit careful. Slip into that break, come back. We'll wind down the markets for you. We'll try to get you more clarity with regard to Sun Pharma as well. Welcome back to Closing Bell. Well, Sun Pharma is the stock of the last half hour, Rod. The EBITDA number prima facie appeared as a bit of a miss, but then you adjust for the Forex element that we briefly mentioned about before you went into that break as well. And the adjusted number actually doesn't look so bad. And that's why the stock has now recovered all of its losses. It's at the high point of the day. But today has been a good trading session. We're going to be going home. At the last tick is going to be at the day's highs. So super trading session. A few numbers that came out. The street chose to look at more positives than negatives. You had Tata Consumer that was up close to around 6%. You had L&T that's up close to around 5%. So both of them put on a lot of weight. And yesterday you had BEL that came out with a set of numbers. That stock as well goes home with a gain of close to around 5.5%. When L&T goes into the budget with a 4.5% returns, it's telling you that the street expects something. They expect something for the economy to boost it up if there is some kind of slowdown. Well, they're expecting some measures to be taken. And that's why L&T, that's one of the largest contributors on the upside in today's trading session. What else? What else did well? Vari Energies, that came back, and it came back in style. Remember, that's the one that corrected from around 3,500 rupees all the way to around 2,000 rupees. The street likes the margins. The margins much better than what we saw on a sequential basis as well as on a year-on-year basis. And that was the big outperformer on trade. Whirlpool, the parent saying, well, we have come down to 51%. We want to come down to 20%. The street is not buying that. They're saying that, hey, we consume some part of that supply, but yesterday the stock was down 20%. Today the stock is down another 10%. What else did well? Kalyan Jewellers. The street says, let's ignore the noise for now. Buy into the numbers. Buy into, one of the prominent names coming back on the board. So that stock goes home with a gain of around 15%. Jupiter Wagons, the management commentary was good. That was up close to around 13%. Ola Electric as well. It's fighting for its market share, trying to get it back. Is it coming at the cost of margins, at the cost of profitability? That's something the street is debating about. But otherwise, that one as well did well. And railway-facing themes, RVNL, IRCON, both of them did pretty well in today's trading session. Short point is, it was a solid trading session. The bulls have fought back. Just a few sessions ago, we were flirting with around the 22,800 odd mark. Boy, oh boy, we're closer to around the 23,500 odd mark today. But you need to take note of the fact that for the last 4 months, the Nifty has entered in the negative terrain. And that's the first time in 24 years that we have the Nifty losing for 4 straight months. We'll wrap up on this edition of Closing Bell. Stay with us. Editors Roundtable comes up next, and we have Siddharth Bhaiya who's joining us.